Great. Thank you for coming here today. We have all the intros ready already, so let me just get started. So with EigenLayer launching this year and AVSs coming to market, we are going to talk about how will financial markets actually be valuing these AVSs. While building the right product is at least half of that question, price discovery and market reception is at least the other half. So to start things off, I want to start with Clayton, who's at EigenLayer. I want to ask you, can you contextualize for the audience, what is an AVS and how is its security framework different from another protocol?
Yeah, definitely. So I guess to make it very thought-provoking is that it could theoretically be anything. You could build Ethereum on top of EigenLayer by leveraging a different version of Ethereum on top of EigenLayer by leveraging ETH security. It doesn't have to necessarily be a blockchain. It ultimately just needs to be something that requires some form of decentralization for the use case of it existing. It could be a blockchain. It could be a middleware solution that's supporting other blockchains. It could be a specific execution layer. It could be a permission protocol. But anything that needs a group of operators and some sort of crypto asset to exist without anyone necessarily controlling it outright.
Cool. And as a follow-up, how can you describe the dual token staking model for AVSs that are building on EigenLayer?
Yeah, definitely. So the primary asset that's being used and the TVL that everyone's talking about and maybe drooling over right now is in the form of Ethereum. That being said, the roadmap for EigenLayer was never bound to Ethereum only being the only cryptographic asset that can be used for security on EigenLayer. So basically, any AVS can leverage the security of Ethereum and ultimately the Ethereum validator set for some form of their security, but they can use multiple assets over time. And so using AltLayer, for example, which is a live AVS that has been public about leveraging Ethereum security as well as the AltLayer token in the future. There can be some sort of system in place to where 50%, 75%, whatever the number is, will weight the asset based on how much security is being devoted and who is effectively in control of the network on an operator-by-operator basis. Something like a Berachain, for example, or a Monad, or any of these versioning protocols that are going to launch, you can have 10% of your security being devoted by EigenLayer operators in the form of ETH. 90% can be devoted in the form of the Bera token. So the flexibility can run it anywhere, but ultimately you can have a basket of tokens that are securing a single protocol, which is the main differentiator between how decentralized networks normally are secure from a proof-of-stake perspective.
And David, I know that Finality, you're investors in EigenLayer, so how do you actually think about why people would want to be an AVS and build on EigenLayer? And what are the trade-offs that they're considering when they sign up for this dual staking model?
Yeah, I think the easy ones are, you get to bootstrap a network quickly. The economic security we think will be cheaper, we hope, and you get this ecosystem that you're building into. So I think those are kind of the easy ones. I think that the ones that are interesting is that also, for me, things that will, economic security will enable new primitives to enable new applications. So there's new middleware, and I think that that's the stuff that's going to be interesting. We haven't really seen what it's going to be yet, but I think that there's a lot of interesting things that are going to come out of that.
And this is for any of you, but how large do you actually think the AVS market is going to be, and what are going to be some of the drivers for that?
Could I maybe just start with, giving folks a sense of the scale today?
Please.
So I think, we track this ecosystem very closely. We're tracking 70 to 100 AVSs that are public and private. Of those, we have a public and private market cap of at least 11 billion. So that's public and private valuations of the tokens that we know of. And then within that, you can look at the EigenLayer ecosystem. There's 18 AVSs live today. Of those 18, how many have tokens? If you exclude EigenDA, 7. What is the market cap of those tokens? That's about $500 million of circulating market cap, 3 billion FDV. Very small market. But again, we have 70, and we're talking about 7. So that's 10x growth, we think, and we think the valuations of those will be bigger when they come out. The valuations on those 8 that are 3 billion FDV, as I mentioned, I think that this can talk about how I think the dynamics will play out, and we can talk about that in a little bit when these projects get in the market in valuation terms. But if you look at the market cap, the FDV, to the, you can call it TVO or the economic security, on average, those 7 will trade at 0.2 times. And it can range from 0.5 to 0.05, but that's about the average of those. And then if you look at the ones that actually have revenue, and there's only 2 that I can identify, and I think this is where the market eventually matures to, those trade at an average of 160 times. So that kind of gives you a sense of the size of the market today, how the market's looking at the valuations, and then we think it's going to grow materially from there.
Maybe a follow-up to this. How many AVSs are you predicting are going to be live by the end of this year? And does market timing matter for them to come to market? Like, is there going to be a dynamic where they're potentially competing against each other for investor attention?
Well, I think it's difficult to say how many will be live. We've been very surprised, as Adam's talk mentioned today, with how many came out. I mentioned we have 70. I think by the end of the year, I personally wouldn't be surprised if there was 40, 50. I think that number would make sense to me. In terms of timing of the market, I think it always matters in capital markets, and that's not just crypto, it's traditional markets. You want to be in a time where there's good market demand, there's good risk on, there's good appetite for new issuances coming to market. So I think in some sense these AVSs, many of them, while they're not competing directly as a product against each other, there'll be different verticals that they're competing against as AVSs for customers. You are competing for capital and attention and mind share at that point. So from that standpoint, there is competition coming to market and competing for investors, just like you don't want 2 hot IPOs in the traditional markets coming at the same time. So I think that those are all definitely considerations. The macro factors and the narrative and all that will come into play.
I think too, like if you're looking at previous examples of shared security, like Cosmos or Polkadot, there's less protocol limitations, where obviously attention is super important. There's only so much capital that's interested in in investing in a very nascent industry. But if you're looking at the parachain auctions in Polkadot, those were happening every 2 weeks, and then there was only 100 people that could actively be a parachain in Polkadot. So that was like a force function to okay, we need to invest, we need to launch now, we need to launch our token, we need to make this announcement, et cetera. Same for shared security in Cosmos. Anyone that's trying to leverage interchain security, there's only 100 some odd validators in the Cosmos. You have to do this via governance, and the difference between those 2 shared security models and EigenLayer is anyone can be an AVS and anyone can be an operator in EigenLayer. So you don't feel an obligation to really do anything. And even just launching a token, right? You need that token to have security, but now you don't, because now you can leverage a different asset in the form of ETH.
Cool. And now to move over a bit to market commentary. Alain, perhaps you with GSR, you also have some liquid market perspective on this, but how do you think that public markets are going to be looking at AVSs compared to typical dApps?
I mean, if you compare on the public market, you basically need to compare it to like a dApp or another chain out there. And there you're probably going to have TVA, you're going to have Mindspace, you're going to have marketing, all that. Now the question that's going to be interesting from a trading standpoint is, will be trading on the premium on a discount? Mm-hmm. I mean, the idea for a premium would be that the go-to-market is much faster, as David mentioned before. If you build on EigenLayer, you essentially have liquidity, you have some kind of user base in an ecosystem, you have PR and liquidity, but at the same time, you are dependent on the protocol, which down the road could probably be an issue, but you're probably going to bootstrap a bit earlier. Then the other thing is, what you essentially have to choose if you're an AVS, you're basically choosing between an FX rate risk you take on, because you basically get ETH you get ETH security, but you pay in your own native token. Hopefully it's going to be cheaper. That's the whole idea of EigenLayer. Versus you basically have the execution risk if you don't bootstrap the economic thing, that you basically have to build everything else. Now the stuff is when we look beside the macro and all the valuation fundamental stuff that we come up, a lot of crypto is essentially just supply and demand driven. Now the interesting question is who will be ending up with a lot of this AVS native token? And that's essentially going to be a lot of the operator. Now the question is going to be, they get this new token, what's their idea to do it? I mean, if they have some utility in some form or way, there's probably going to be a high probability that they get somehow recycled in a DeFi protocol as collateral, whatever that is. If there's nothing available, it's going to be that people just going to sell it to accumulate more ETH to actually just compound the rewards and going forward. So I think to see this dynamic, it's going to be very interesting for us.
And maybe just to go like one layer below then, how do you think that liquid markets will be valuing the Eigen token, and how does that impact the value of AVSs that are building upon it?
I'll take that. You know, I think personally I would make the argument that EigenLayer, when the market values it, should look at it like an L1 or an L2. And the reason that I think that is because if you look at the EigenLayer ecosystem, we mentioned it already has about 70 AVSs. If you consider an AVS like a dApp, that puts EigenLayer in the top 20 or 30 L1s or L2s. And I think that that, from one standpoint of the ecosystem network effects, is key. I think the second standpoint that should make it have, you know, L1 or L2-like value is it, with the intersubjective slashing, you have a level of sovereignty at the EigenLayer network that other applications don't have. And if you think about what makes an L1 really valuable, it's that sovereignty at the L1 level where that chain can fork, that chain can, the social consensus can own the governance and own the value on top of that chain. I think those, for me, are some of the key reasons EigenLayer should have maybe a fat or semi-fat kind of level of value in the stack.
And in extension of that, what do you think are other fundamentals that the market is going to look at as they do value at AVS tokens? Like, will it be TVL? Are there other factors as well?
Well, I think the market is still figuring this out. But I mentioned those stats in the beginning of TVL or economic security and revenue very intentionally, because I think that the market probably will look at TVL or economic security as the first heuristic when the market's trying to figure it out. I would argue that in some ways I can understand that because, you know, the value that LRTs or other capital providers put there could maybe be a reflection of what their expectations are, and hopefully they've diligenced them to have good fundamental views. But I think in the long term that's not the right way to think about it, because TVL, if you think about like a cap stack of a company and these are economic entities, like restake value is like debt on a cap stack. You know, you have an enterprise value, it's comprised of debt and equity, and that your debt is like your piece you have to pay. And I know there's other features, but I'm making an analogy here. But I think really you should look at the valuations of many AVSs in the future based on their revenue and based on their cash flowing fundamentals. And I think we're a far ways off from that, and that'll of course depend industry by industry. And that's why projects will have to go to investors when they go to the market. They need to get their story out, and they need to be talking to investors and talking to the liquid side, not just the venture side, helping them understand what the story is, how they should be thinking about the valuation, how they should think about the narrative, and get that story out not just to, you know, your venture investors and your enterprise customers and the exchanges, but to the liquid market as well, and I think that's very key.
I mean, to take another side on that is, I mean, when we think about EigenLayer as a marketplace for decentralized trust on a very high level, and then you basically have the different AVS, and then the question is going to be, will most people just choose their operator and the AVS by themselves? Highly likely that's not going to happen. And when you just think about the pure act of choosing an operator on AVS that's going to run a specific software, you're basically underwriting risk. I think most retail people won't be able to do that. Now a question is going to be, if it's a marketplace and you have supply and demand, who's going to manage it? And it could be an argument that the liquid restaking protocol, because they take on the function of underwriting the risk. And over time, different LRT compared to LSTs probably won't be fungible at all. They will have different risk profile. It could be they have different verticals. They focus and specialize on it. Then the question is being, will will EigenLayer be more than just a middleware? Because it's going to be highly probable the capital and user will enter the stack through the restaking protocol. So they basically actually own the capital and the stake. And then on the other side, it's probably going to be a question how many AVS out there and a bit how the quality of them are distributed like it. Because I think if the yield is too high, it's basically highly likely a shit token at the end of the day, because it's like, if you look at companies and they pay you 20, 30% on debt, it's probably not going to be high quality. So I probably see it closer to something like Lido, another middleware from a valuation standpoint, the L1.
Did you use the term little people? Like when you were mentioning, well, because I would feel like I'm a little person as well if I'm participating like on the Ethereum side.
Oh no, myself as well. I wouldn't never be able to underwrite risk. I also think, I would say the little, let's say non-professional people, because even you can own a lot, it's still a lot to underwrite that risk. And I think as long as you just have retail participating, they're going to chase more and more yield, because there's a probability that we reach peak MEF, and then the staking yield, the more gets staked, gets lower. So basically everybody that stakes will somehow game theoretically be forced to restake. And then you're going to have some kind of difference. That's why I also think with the LRG, it's going to be different than LST, because on the LST level, the core function securing the Ethereum network is more or less the same. I mean, there's some technical difference, but on the LRG level, it's going to be completely different risk profile.
Yeah, I mean, I think if talking about how the market, and like what the token price is going to be, you know, on an AVS by AVS basis, like all operators on any single proof of stake network is selling their commission to make money. You know, like they're selling it to cash to pay for the infrastructure, to pay for the people that is behind the infrastructure. But anyone that's staking, whether directly or through a vehicle, likely an LRT right now on EigenLayer, what is that vehicle going to be doing with the asset? Because the end user is not going to actually have access to that asset unless the LRT is doing that as like, this is our value proposition of this LRT. You stake with us in this LRT, we don't sell your token for you. You can hold it if you want to. It hits your wallet. But the UX of that can be, you know, kind of confusing for people, where it's like, I put ETH in, I expect ETH back. So what sort of markets are going to exist where that LRT still gets access to that yield, because an AVS can kick that LRT off if, you know, they're like, you're selling this token on the open market, I don't want that. So how can you do this like where it doesn't necessarily affect the token price, but still maintains UX for the...
And just to add, but from the heavy vehicle side, I think it's going to be very interesting, because you can base them like be very conservative AVS in it. It's going to be closer to a fixed income product, and someone's going to say what David mentioned. You have like a small new AVS coming up. We have a low valuation of token, and they're just going to treat it like a venture portfolio. And they also think the LRG protocol is going to be responsible for most of the distribution, meaning raising the capital to stake.
And just a final fast question. Do you believe that AVSs will be valued as monetary assets or otherwise?
AVSs, generally not, but I think they'll trade like in the beginning, like some of the Web3 protocols we see, like the graph indexing or Filecoin, they can trade at high multiples, but I think over the long term, probably not monetary assets.
I would agree. I would just say it makes the probability of ETH becoming more monetary asset much stronger, because it's basically now expanding ETH outside of the Ethereum blockchain to other one.
I mean, it totally depends on the use case as well. But, you know, we are pre-AVS protocol revenue. We're pre these tokens existing for, you know, a period of time to where there's, you know, a large community and people are, you know, actually building applications on top of this, and that's a core value proposition to where, you know, now other people are exposed to it, yada, yada, yada. So, I mean, it's TBD, but I think at some capacities, some of them will.
We got a question.
I don't have any questions. Yeah, well, anyways, thank you, everybody. Please, yeah.
Stuti, great question, by the way. I love that question. We debate that all the time. I want to say, like, whether or not it trades as a monetary asset may not matter. I don't think everyone sees this yet, but if AVSs approach this the right way, because they don't need a token, they can focus on getting the product market fit and build great, like, use cases, which can mean real monetization and really strong token economics. So it may not matter if you're a monetary asset if people do it right. Now, that being said, a lot of founders, it's hard to break these patterns of, oh, well, I can issue a token, I don't need to monetize yet. I think there'll be a shakeout and those projects will not be as successful as the ones that do put their head down and focus on finding product market fit. So.
Cool, thank you. And let's revisit this panel 12 months from now and see how our predictions have performed then. Great, thanks everybody.
Thank you.